Welcome to this week's Minds and Money 5 at 5 show, which today is sponsored by Niobay Metals and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, aim of 5 at 5, 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively interactive format whilst we await the return of physical events. A few admin announcements before we start. So please make the session as interactive as possible. Please have your videos switched on. And to ask a question, you can either post it in the chat box that you'll see at the bottom of the screen, or you can also go to the participants function, ask yourself to be unmuted, and we can invite you to ask your questions live. And of course, being towards the end of the week, we always invite you to bring along a glass of wine or beer to relax, sit back and enjoy. For this week's show, we will be talking about decarbonisation, the EV revolution, and the role of critical green technology metals. To help me discuss those issues, we have Claude Dufresne, Chief Executive Officer of Niobay Metals, Matt Geiger, Managing Partner of Mjg Capital Management, Jessie Chen, Director of Long State Investments, and George Heppel, Senior Consultant of CRU. I'm perhaps going to go straight to yourself first, George, because I'm always interested in how one defines technology metals. Is there a difference between how you define technology metals and critical metals and battery metals? Is there a commonly accepted definition?
Thanks for having me, Andrew. I don't think there really is. I think there are generally some key themes which run through all sort of technology metals. Obviously technology metals or anything which I think are involved are sort of vital for certain technological applications. I think the key themes that sort of pass through all of them are they normally have very, very high demand growth because their demand is growing quite quickly. Often their sort of markets are in quite a sort of nascent state. They're not normally very mature. And that means that often the supply picture isn't necessarily as kind of evolved or sort of as clear cut for the future. And that does mean that they do tend to have a degree more price volatility than your sort of traditional mature sort of metal markets. But yeah, I mean, they can take all kinds of different forms. You can have comparatively small, tiny markets like sort of gallium, germanium, or the superalloy elements, which could also be clarified as technology elements. The sort of thing where there's only a market of maybe 50 to 100 tons a year for these elements at the smallest level. And then obviously you have technology metals like lithium, which are approaching up to 1 million tons over the next 5 years and are growing out very quickly and sort of establishing like a secure market. So yeah, I wouldn't say there's necessarily any one key sort of definition which sort of covers them all. They all have a variety of different sort of market sizes and forms and applications and that kind of thing. But I think in general, the main thing which really secures is the key theme which kind of runs through all of them is sort of a high demand growth, a sort of volatile supply as a result of a high growing market, and as a result a degree of price volatility.
And just have a follow-up question to that. I'm just kind of interested to see as to what sort of trends are you seeing in the technology space, and also obviously later on we'll be hearing from Niobay Metals. Is I guess we've had any sort of views or opinions about niobium.
Yeah, sure. I mean, in general, in terms of in terms of the research that we're doing and the sort of the themes that we're seeing, I mean, the key one is obviously electrification. I mean, that's kind of been the bread and butter of a lot of our work for the last 5 years now, I think, really. I think there are definitely changes to what people are asking. I think back in sort of 2016, 2017, people were trying to figure out, does this electric vehicle story have any legs? Is it going anywhere? What's it likely to be? And then we went through a theme of everyone kind of rushing for sort of procurement, and like a lot of our research was based around sort of the ability to sort of procure these materials and sort of building out sort of a supply chain for them. And as it currently stands in 2021, a lot of the work that we're doing right now is really around ESG. The supply chains for a lot of these metals have been built out. I think some of the supply concerns have eased a little bit, and now a lot of the concern really is on scoping out carbon emissions on the supply chain, understanding water usage, understanding political risk, really trying to sort of optimize those supply chains. I'd say that's really the key. That's taking up the vast majority of our time right now is sort of trying to sort of really nail the ESG themes around battery metals and that kind of thing.
Yeah. And just I know we'll be hearing a lot more from you later, Claude, but can you just probably give an outline to our listeners? What are the sort of key uses for Niobay?
Well, thanks, Andrew. Right now, the over 90% of the world consumption of niobium goes in the manufacturing of high-value steel, high-strength low alloy steel, advanced high-strength steel, etc. So the steel industry is currently the largest consumer of niobium. But obviously, as we see some recent development in battery technology, we believe that niobium consumption could increase significantly because of the new technology.
Okay, thank you very much for that, Claude. I think that thing at this stage, I'm quite keen if perhaps Kelvin, we can bring up the today's sort of poll, if you can launch it on the screen, and just bringing up the sort of like polling question. It leads into a couple of questions I'm quite keen to ask sort of Jessie and Matt. And the polling question is like, has the move towards decarbonisation changed the way that you invest? And whilst you're just voting on that, seems to be quite a lopsided poll at the moment. Perhaps I can bring in Jessie Chen from Long State. Again, perhaps for our listeners, can you just tell us a little bit about Long State? And also, obviously, we've heard from George, we've heard from Claude, but how important is decarbonisation and the EV revolution as an investment thematic for Long State?
Hi, thanks Andrew for the introduction, and thanks for having us today. My name is Jessie Chen and I'm from Long State. Long State is an investment company and we focus on funding on growth opportunity worldwide. Well, decarbonization and the EV revolution play a very big role in the green economy, which will bring significant changes in transportation during the next 20 years. And perhaps most significantly, vehicle powered by petroleum fuel will be replaced by lithium-ion battery or fuel cell. To elaborate on the enormity of this market opportunity, in order to achieve the Paris climate goals, 100 million electric vehicle must be sold every year by 2025, up from around 4 million in 2020, which implies enormous growth, not only for electric vehicle manufacturer, but companies in their supply chain. So the transition to a low carbon economy along with the EV revolution present tremendous growth investment opportunity for Long State, and we certainly want to be part of it. We have been investing in battery-related sectors since 2015, and I have visited a number of lithium and graphite projects around the world before COVID as well. Thank you.
Okay, and I'm just quite keen as sort of like you know, as a matter of interest. Do you actually like own an electric hybrid car? Do you think that currently at the moment we have the necessary infrastructure in place?
Yeah, personally, I don't. I would love to have a Tesla, but I don't own any car as parking is quite expensive in New York City. So in terms of the EV infrastructure, I believe in the next 4 to 5 years, we should see most of the infrastructure in place, as the availability of public charging station is a major concern for EV potential buyer. And we understand that it requires large capital and also government support for it. In the U.S., Biden administration proposed spending $174 billion to boost American EV market and use some of the fund to build the national EV charging station of 500,000 stations by 2030. So I am very confident that we'll see the necessary infrastructure in the near future.
Okay, thank you very much for that. Kelvin, I think we can perhaps sort of close down the poll and bring the polling results up on the sort of screen, which shows an overwhelming sort of majority. 74% have said that that yes, the move towards decarbonisation has changed the way that they go and invest. Bringing in Matt Geiger from Mjg Capital. I'm just keen to, if you can perhaps just share with the audience a little bit about your kind of company and who you are, and also I guess about how much of your portfolio is actually invested in technology metals mining companies.
Sure thing, Andrew, and it's great to be back on 5 at 5. Thanks for having me. Mjg Fund, we're based out of San Francisco. It's a long-only investment fund focused exclusively on natural resources. Technically forestry, water, agriculture, Protein fits within our mandate, but at the moment we are entirely invested in metals and mining. Long only approach, keep a concentrated portfolio between 15 to 25 names at any given time, and really try to approach this from a bottom-up perspective, with a focus on people, focus on asset quality using conservative metal prices, focus on the company structure, focus on price to value. Only then do I really look at the commodity in question and what macro trend it falls into, that kind of stuff. So it's actually a pretty small part of our investment process. So funny enough, for that poll, I was actually one that answered no. While I do have opinions on these macroeconomic trends, and I do think the decarbonization movement that we're seeing is going to be a big beneficiary to the mining space, or at least many of these mining companies focused on specific metals. That said, I try to tune out the noise as much as I can. I would argue that these narratives have been in place for 4, 5, 6, 7 years at this point, and we could have seen this coming. Just because everybody's talking about copper, nickel, or rare earth metals right now, it doesn't mean that anything's changed all too much from where we were in 2018 or 2019. So I think these narratives have been in place at some time. You have to be careful as an investor not to too aggressively chase whatever the flavor of the month is, whether that's a given narrative or a given metal or two. So that's kind of the approach that I try to take as an investor. Tune out the narrative as much as you can. All that said, somewhat by coincidence, basically the opportunities that have crossed my desk and the investments we've decided to deploy capital into, we are roughly 55% exposed. This was as of the beginning of April, to what I would consider green metals, energy metals, battery metals, technology metals, however you want to describe it. 5 or 6 different terms that folks use. I'm maybe a bit more liberal in my definition of what these include. I would throw copper in there. I would throw nickel in there. I would throw uranium in there. So it's not necessarily the very niche metals, rare earth metals or vanadium or gallium or rhodium, mentioned by George earlier. So yeah, of that 55%, roughly half of it's copper. So copper is our highest weighted metal in the fund. And again, that's more of a consequence of the investments that have crossed my desk and the teams that I've decided to back, less so than say, no, we need a bunch of copper exposure. Let's go out and buy a bunch of juniors. Uranium is a little over 10% of our weighted fund at the moment. Nickel a little bit below 10%. And then we do have some rare earth and vanadium exposure as well.
Obviously looking forward to November. We've got the COP21 summit later this year in Glasgow, I think. Any thoughts on how that might impact technology metals demand? Do you think it will have any impact?
No, not in the short term. I mean, these are long cycles, and any technology shift can take years and a decade or more for it to actually show up in terms of tangible metal demand. So I think it's worth following closely as an investor and kind of knowing where the shifts are occurring. Are batteries in EVs going to be NMCs, or is LFPs going to come in and steal the day at the last minute? Do we have graphite anodes for the foreseeable future, or is silicon going to come in, and is there a chance that it could take graphite's reign, or maybe niobium? So I think it's important to keep an eye on the technological trends, but I don't necessarily think the consensus from Glasgow is going to create actionable investment advice for us natural resource investors. It more just helps provide context and a mosaic for how we're investing and where we think technology is changing over the longer run. But again, these are multi-year processes in order to shift from one technology to another. And so, I wouldn't get too excited about particular announcements and dive into a specific metal just because you think that Tesla is shifting more towards LFP versus NMC or what have you.
Yeah, and sort of in terms of the context as the way that you define technology metals, so you take something maybe like a broader sort of a definition than obviously some other investors. But if there was one particular technology metal that you were bullish upon, what would it be? Is it sort of copper or uranium, or is it something else?
Yeah, I mean, copper is probably the biggest layup over the next couple decades here, and you know, it's essential to transport electricity from point A to point B. There's 4x more copper used in electric vehicles than there are in your standard internal combustion engine vehicles. I mean, copper's a clear beneficiary. You know, uranium as well. I am a uranium bull to some degree.
Yes.
But believe in the, you know, it is the only form of baseload power, can operate around the clock without any CO2 emissions. Just in the past couple of years, surprisingly, I think we've also seen a sentiment shift from a lot of folks, especially on the left, that were maybe more inclined to be anti-nuclear as recently as last decade, kind of coming around, realizing the enormity of the challenge we face with climate change, and the fact that we're not going to be able to do this solely with wind turbines and solar panels and what have you. So I think, yeah, those are two basic metals to look at. But again, I would focus, or I would emphasize that everybody on the call focus less so on the specific metal and more so on the people and the asset and all that other good stuff. The metal is a nice backdrop, and it can be a good wind in your sail, but you should assume that the vast majority of these juniors are uninvestable, even if they're focused on a metal that you're very excited about. So I think it's important to keep that in mind.
And Jessie, if there's one particular technology metal that you're sort of excited about, what would it be and why?
Sorry, okay, I agree with what Matt said, but I am very bullish on lithium. And the reason for that, because we have witnessed the beginning of the EV revolution. The electric car industry has been expanding for years, and this is still a budding industry filled with investment opportunity. We understand that China has dominated global EV demand since 2017, supported by government subsidies. But as we have seen the EV market mature, other jurisdictions have seen an increase in EV demand. From second half 2020, EV sales have accelerated and have become more global rather than China-centric. In Europe, particularly, we have seen the strongest growth with the EVs, supported by public policy initiative and physical support. We also seen some non-Chinese car companies such as Volkswagen, BMW, and others have committed in EV manufacture. And we believe US should be right behind it. And also, according to S&P Global Market Report, we expect a global passenger EV sales to reach 5 million units this year and 11 million units in 2025, which represent 30% compound annual growth rate over next 5 years, dominated by China and Europe. So we do see the opportunity there.
Mm-hmm. And just continuing to George from CRU, for in terms of a technology metal, one that you sort of like pick out for our listeners to follow?
Yes.
Well, I guess my go-to answer for the last sort of 6 months has been rare earths, but now that's kind of happened, I suppose. I don't really have an immediate answer. I think rare earths continues to be my major concern when it comes to supply of raw materials for the transition to e-mobility. I think when I look at the other commodities required and sort of the volumes required for the transition to sort of electric vehicles, I think there is going to be a lot of price volatility. I think there definitely are a lot of very sort of positive aspects to them. I think rare earths is the only one for me where there is a very, very clear requirement for a very large quantity of the material. There's not an immediate roadmap to how we get that amount of materials. And it also feeds into sort of the decarbonisation of sort of electrical grids as well, because rare earths are very important for wind turbines as well. Sort of an honourable mention would probably be cobalt for me, just purely because I think our analysis suggests that supply of cobalt is very underinvested over the next 5 years. We have major concerns about the availability of cobalt towards the middle of the decade, and to some extent, that will be alleviated by a shift in technology. We're probably all underestimating LFP, for example. But nonetheless, even with a widespread shift to LFP, there are still concerns around the availability of cobalt towards the middle of this decade. So I think that's probably an honorary mention.
Okay, thank you very much for that. Well, I'm not going to ask Claude what he would have, what technology metal he would have chosen, because I assume you would have answered niobium. So without further ado,
we hope so.
Sorry?
I said we hope so.
I'm assuming that you could have would have Claude, but obviously it's sort of like at this stage, I'm very interested to hear more from Claude and Niobay Metals. Just to give a bit of a background, while my colleague just brings up, my colleague Kelvin just brings up Claude's slides onto the screen. Niobay Metals is a Canadian mineral exploration company that is publicly traded on the Toronto Stock Exchange, TSX-V, NBY. It is developing the James Bay niobium project, a world-class niobium deposit located in the James Bay region in Ontario, Canada. The company has 100% of the ownership rights to the project. In addition, Niobay Metals is also the majority owner of the Crevier project, a niobium and tantalum property northwest of the Niobay mine in Quebec. We're very keen to hear more about this project. Claude, over to you.
Great, thanks very much again, Andrew. So pleased to be part of the Mines and Money 5 at 5. So maybe I'll explain a little bit our situation, and I must say I vote for niobium. That's my favorite technology metal. Niobay, as a company, we've been focusing on niobium and critical mineral. And right now, I will say our main focus is the development of our James Bay niobium project, which I'm going to touch base shortly. But recently, also we're spending a much more time and effort towards the development of our other niobium tantalum asset. This one is called Crevier. It's in Quebec. And I'll explain a little bit of why we're starting to pay more attention to both projects. So Andrew or Kelvin, if you can switch slide, please. So obviously a forward-looking disclaimer. So if we look quickly in terms of our James Bay projects, I won't read all this, Kelvin. So can we? Here we go. So on the James Bay, what you need to realize about the niobium market before I get into too much detail into the project itself is a very unique commodity. And why I say this is there's currently just a small number of producers in the world. 90% of the niobium goes in steel, and there's 3 producers in the world who supply niobium to the steel industries. Two of them are located in Quebec. 2 of them are located in Brazil and 1 in Quebec. And obviously, James Bay, we're lining up to be the 4th producer in the world. We've have a lot of expertise in the niobium space. I've personally been involved for 20 years in that area. So we've basically discovered another niobium deposit, which is very similar to the Niobay mine in Quebec. And all of those producers are private companies. So if any investors have any interest to invest in a niobium deposit, there's not many options out there. So that's one in terms of the supply. The other very important point, which George kind of raised, and I must say that niobium is not part of his concern, is pricing and supplyability. One of the niobium producer in Brazil, a company called CBMM, they're like the big elephant in the room. They have a capacity to supply the world, and they will always going to have the capacity to supply whatever material is needed. They're sitting on a huge deposit, very high grade. So these guys can easily control the market and control prices. So for that reason, the niobium prices has been known to be very stable. Obviously, they're increasing over time because everything is costing more, everything is more expensive. But even though with what we're seeing with the potential future for niobium batteries, we don't see any fluctuation in terms of pricing. So whoever is going to be building niobium battery could rely on stable pricing down the road. So that's a very important point if you want to build up a foundation on niobium. So maybe Kelvin, if you switch back, we'll jump into our James Bay niobium projects. So well, here you go. I'll go quickly. What we're really pleased with that asset, and what it's important to highlight here is we've recently published a PEA, and that PEA we looked at production of no more than 5% of the world market share. Because of the dominance of CBMM, our goal is basically to enter the market, to make room for us, and to be able to grow as the market will grow. So, and because of the morphology of the deposit, we can mine our deposit using an open pit mining method all the way down to an underground mining method. So we decided to do preliminary economic assessment over looking at the 3 mining scenarios, and also that will provide our stakeholder the opportunity to have a part in deciding which scenario will most likely going to be suitable for all our stakeholder. So open pit, I'll give you an example. Open pit is certainly more impact on the land, more surface area, much larger surface area, whereas open pit, it's much, create a lot of employment opportunity. While underground is the opposite. Obviously, your footprint is much less, but the work opportunity of the local stakeholder is much less. So we're talking about ESG. At Niobay, we see it as ESGI for ingenious. Sorry, I have a hard time with that word. But local First Nation. So they're part of our stories. They're part of our project development. So they'll be part of our decision making in terms of which scenario we'll be using. Anyhow, if you look at the PEA of our James Bay project, and this is for the production of niobium that is consumed by the steel industry, so ferroniobium production. We're looking at net present value in a range of $1 billion, all the way down to $733 billion after tax, internal rate of return from 22 to 28%. And this is to limit, by limiting our production to be no more than 5% of the world market. So if we just increase our capacity a bit to gain additional market share, obviously those numbers are going to be even more impressive. And mine life, we're looking at 23 to 30 year mine life right now. So there's no real needs for us to further expand the resource because it will have no impact on the NPV point of view. So we're saying on definitely a very solid deposit. There's not a lot of asset like this that you can find here in Canada that has so much value. And then we're looking at obviously a huge opportunity to further increase the resources down the road, because the deposit only has been drilled down to 330 meters deep, which is for a mine is very, very shallow. So Kelvin, can you switch, please? What is niobium? Again, I'm maybe a bit repeating myself here, but niobium, like 90% goes in steel and makes steel stronger, lighter, and it adds other very properties that are very positive to the end users. And because you make stronger steel, you can make thinner part of steel. And by making thinner part of steel, that contribute to a significant reduction in CO2. What I'm saying by that is if you produce a high strength alloyed or steel, which niobium is part of, it could require anywhere between 5 to 25% of overall weight saving in steel. So a ton of steel generate anywhere between 1.8 to 2 tons of CO2. So if you recalculate how much steel you can save if you want by adding niobium in steel, it boils down to roughly a reduction of anywhere between 130 to 175 million tons of CO2 reduction on a yearly basis. So this is significant. You'll see in the next slide, I'm gonna chat about battery metals and maybe go back, Kevin, please, on the previous slide. But give you the primary market for niobium is obviously steel, for structural steel. All wind turbines contain a lot of niobium in the steel, not so much on the turbine itself or the. Obviously, we find niobium in batteries and cars, shipbuilding, aerospace. Most of those jet turbines and even gas turbines are made of super alloy. And in those super alloy, there's a fair amount of niobium also, and tantalum also in this. And niobium is known to be a very superconductor itself. Next slide, please, Kevin. In terms of battery, and maybe you can go on the last slide there, following a year ago. So what bring a lot of excitement here is the recent development of battery metal and obviously niobium. So there has been recently some publication made by Toshiba, which is obviously one of the largest supplier of battery, who have developed their NTO battery for niobium titanium oxide. And what that battery does, basically, you could charge the battery from 0 to 100% in about 6 minutes. So that's super fast charging battery. And on top of that, you're increasing your life cycle, and right now they're running tests at 25,000 cycle, and the battery is still is still up at more than 80% of its original capacity. So very long life, very performance. Obviously, if you can charge in 6 minutes, you could discharge very fast too. So if you need power, it's there available. And you also help to increase the energy specific density, and is very, very safe. So you're never going to see an niobium battery is going to explode there. And another important point which needs to be raised here is that the niobium will be consumed, or will be on the anode side of the battery, not on the cathode side. And from what we understand from talking to some of these battery manufacturers, is that they can use NMC on the cathode, they can use LFP. It doesn't really matter as long as the anode material is an niobium oxide, often used with titanium, or some other are using tungsten, and there's other metals involved. So they've been the prime markets right now for those types of battery will be a hybrid vehicle, and let me explain you why. Because as we all know, when you're using a hybrid vehicle and you're decelerating or you're braking, that generate electricity. So there's a small generator. And because you could really fast charge your battery, obviously you're fast charging a lot your energy back into the EV car. So that will constantly bring you more power that you can run on your battery actually much longer. So, and also application that are currently looked at is that, like power tools, like all the small robots that you see in warehouses that could be charged in 5 minutes, or like forklifts, name it. So everything that runs on a 24-hour basis are definitely suitable for niobium batteries. So that said, we see that the overall market for niobium battery could basically increase. The demand for niobium in battery could increase roughly by 100% by 2030. So if the niobium market grow by 100% by 2030, well, if we go back to our PE slide with the financial results, you can realize that obviously we'll be able to produce much more niobium from that operation. So if we were to double production, which the deposit itself is suitable to, obviously you can realize that we're sitting on something very, very valuable here. So the beauty, and I conclude with this, Andrew, is we're sitting on a real asset that the demand is already there, and we're just going to take 5% of that demand. And the cherry on the cake is all the opportunity that will become available to us with the development of niobium batteries.
Okay.
So I hope that get everybody excited, because I definitely am.
Yeah, can I ask a question? Can I ask a question? I want to ask a question. My name is Luanza Quince. I used to work as an electrochemist in industry 30 years ago, for about 10, 20 years. And you're talking about niobium batteries, and as you all know, that depends on the electrochemistry. I wanted to ask you, most of the electrochemistry research is being done for the most part by government. I worked in academia, and very little of it is done there. I did work with fuel cells at IIT, Institute of Gas Technology. So my question to you is, don't you think that we need to have some research to transform electrochemistry in the private industry for the purpose of reducing the production costs, capital investment of using niobium and other alloy metals?
Right now, thanks for your question, Lawrence. Most of the R&D work is done by either Toshiba in a joint venture with the largest niobium producer, CBMM. So everything is funded privately. And obviously, to make those niobium battery more cost efficient, and I didn't mention it, but the cost of a niobium battery is about 50% more expensive than a regular NNC / graphite type of battery. So there's still a lot of ways to reduce costs, but at the end of the day, you're looking at the metal part of the electrochemistry, and niobium is not a cheap element in the world. So as long as niobium price don't go down, the cost of that type of battery will remain relatively expensive compared to the graphite battery.
Mm-hmm. Thank you very much for that question, Lawrence. I think we've got a couple of questions from our guests. So perhaps I can go to Jessie first from Long State. Do you have any kind of questions for Claude?
Yes. So is the question talking about the Nevada and North Carolina lithium projects? I'm happy to answer that.
Yeah, that's a question that I posed. You know, I used to work in chemistry, used to test minerals in some of those locations and worldwide, and it's my understanding, and it is, if you are aware of that, there are a lot of deposits off the shore of North Carolina, of course, mixed with bromine, and there's a problem with that, separating it, and they've discovered mines in Nevada. Well, a lot of Tesla production for cars going on over there in California, you know, because of the proximity. Do you foresee, you know, the potential for investment or capital investment in those areas?
Sure. The answer is positive, even there's some problem here. And in terms in terms of the project in North Carolina, I have visited back to a few years ago. The problem for the project is the resources side is a little bit small, but the good thing is they have acquired another lithium project in Quebec. And going back to the project in Nevada, I would say water issues need to be addressed, and also technology, because most of the project in Nevada and also Arizona is more like clay based. So I think if we can have that technology, that would be a game changer for them. And because they are based in North America, especially in the US, they got supported by the Biden administration, and also the Tesla pushing on this the project on this area as well. So I am very confident in the long run.
Okay, thank you very much for your answer, Jessie. And also, Jessie, whilst you're there, do you have a question for Claude Dufresne and Niobay Metals?
Yes, I do have one question. Can you just talk about the catalyst in the next 12 months? Thank you.
For Niobay, obviously, we're to bring the development of the James Bay niobium project forward, we're continuing to development. So we need to bring the inferred resources into an indicated category. So to do that, we need to go out and drill. So we're lining up a drill program to do that. And we'll initiate a preliminary economic assessment by the end of the year, which should be completed by basically in 12 months from now. So by mid next year, we should have our preliminary economic assessment. That's for the development of our core asset, James Bay niobium project. Parallel to this, Jessie, we've recently announced that we're also doing some metallurgical tests to produce niobium battery grades. So obviously, we want to become a producer for niobium battery grade. And we initiate some test work from both our James Bay projects and also from our Crevier projects. So that could be other catalysts that's going to prompt the company to gain a bit of value. So I hope that answer your question.
Mm-hmm. Okay, thank you very much for that. I'm bringing in George, obviously from CRU. I mean, obviously, as you mentioned earlier on, you've mentioned extensively about battery technologies. I was wondering if you had any thoughts on Niobay Metals and any questions for Claude.
I guess my main focus of interest with Niobay is it's in quite a unique position because niobium as a market is so dominated by one player, CBMM, who have such a large degree of sort of like price control. They have such a sort of mature position in the market. Does that change the way that you approach sort of marketing your products? Does that change anything? Does that change your strategy in the short or long term at all?
Thanks for your question, George. No, listen, CBMM I know well. Like I said, I had 20 years experience in the mining space. I used to sell niobium, so I know the CBMM well. I know how they think. So that's why we took the approach to be conservative in terms of entering the market. Obviously, you've been such a dominant, it could scare off some lenders, obviously, and also we don't want to disrupt too much that market. So knowing CBMM, their strength, obviously entering that market with a 5% market share will not create any issue. And on top of that, an important point is because demand is growing on the 6 to 7% annual growth rate. If we're topping the future demand for niobium in batteries, CBM will become considered almost like a monopoly. So that creates some issue in terms of could create issue in terms of antitrust issue in Europe and also in the US. So adding a second source in a well-established area in the world, obviously I see that as a very positive, even for CBMM.
Okay, thank you very much for that. Just want to bring in another question from the audience from Harry Glancy. Again, for yourself, Claude, you described niobium as a critical metal having a positive impact on the reduction of CO2. Can you quantify the impact?
Yeah, well, the numbers that we're dealing with here is like, if you're on average, you have a reduction of around 20% of the weight in steel. So you're saving 20% of weight. That contribute to about 150 to 170 million tons of CO2 a year. Obviously, so niobium is a contributor to CO2 reduction on the steel side of the business, definitely. And it's too early to quantify what's going to be the impact on the battery side of the business.
Okay, thank you for that. Bringing in Matt Geiger of Mjg Capital. Do you have any questions for Claude?
I do. Claude and I have actually discussed this previously, but I think it will be interesting for the audience. The question, Claude, is of the three different development scenarios here, which of them do you think maximizes the chances of gaining social license from the local community, and why?
Well, a real answer, Matt, is we will need the input of the local First Nation. Like I said previously, open pit is definitely where they will create more work opportunity in that area. I must say the First Nation that live by the project, they're familiar with mining. They have a number of workers who currently work at the Detour Gold mine, which is located 110 kilometers south from us. And previously they were working up at the De Beers Victor mines, and all those mines are open pit mining. So they already have the expertise to drive trucks and shovels and all the mining equipment that we can find in an open pit. And because of our location, which is much closer to the community, so that could trigger a lot of interest from these people to be able to come to work in the mine and then go back at home on the same day instead of having to overnight for 2 weeks, 2 week schedule. So the work employment aspect of the open pit is something that will be regarded by a lot of members, if you want. And now, obviously, on the flip side, the environmental impact is going to be larger because the site is going to be much larger. So that might impact some other folks that prefer to have a much smaller footprint. If we look on the underground, because of the size of the deposit, Matt, we can use pretty much 100% automation equipment on the ground. So all of those, like screw pram, hauling trucks, could be fully automated. And that being said, they could be operated from surface, so that they could be on surface on site, or they could be up at the Musuni, which is the smallest village nearby. So it's a different skill set that will be required there, but obviously the environmental footprint could be much less. And on top of that, the underground mine could be easily operated by battery-operated equipment. And who knows, maybe niobium battery by the time we'll be up in production. So again, the appealing about the becoming a carbon neutral company, or even is certainly going to be high. So it's a very good question, and unfortunately, I don't have the answer as of now. But obviously, we need to we will eventually gonna have an answer on that.
It's a trade-off, right? That's interesting, though. For social license, you usually think, underground over open pit all day, every day, but that's not necessarily the case here at all, because local community is emphasizing employment quite a bit, with environment still in mind as well. Now that's interesting. And just quick follow-up on that. When do you think the decision point is where you're saying we're going to go this way, we're going to go that way, or we're going to go option 3?
As you know, COVID actually hit hard and still really a big problem here in Ontario. And to get the discussion with the local First Nation, we need to have information session actually face to face. And until we can go up and have those sessions, we won't make a decision on which journal we'll be using. So, but listen, obviously we're seeing that the vaccination is progressing quite well, even in Canada. So I'm anticipated to be able to start discussing with face to face with the local First Nation by the fourth quarter of this year.
Excellent. Thank you very much for that.
And Matt, just coming back even to the underground scenario, it's still a very appealing returns of investment, right?
Absolutely. Yep.
Yeah.
At reasonable niobium prices, I would argue, which is an important point.
Yeah, exactly.
I think as we just got about 10 minutes to go, I'm going to go through a couple more questions from the audience. I know briefly, Matt, you'll see in the chat box, there's a couple of questions being posted to you by Christian Pollard and also Harry. So if I can leave you just to perhaps respond in the chat box if you're able to answer any of those questions, because I just want to come back with a few more questions for Claude. There's a question that has been sent in by Sean. Claude, you mentioned the James Bay deposit has the potential to increase what was reported in the PEA. Can you expand on that and what it may look like and how it may impact the net present value?
Well, okay, usually miners will try to maximize the value of a deposit. In our case, because of the uniqueness of the niobium market, we're kind of limited the production output, again, for market consideration. So if the market grow, and we see a lot of growth coming from the battery side of the business, for us, if we were to just say, and to answer a bit more your question, if we were to increase capacity by 50%, obviously the capital required to increase capacity that much is going to be much less than the overall return. So it's a tough question, but it's certainly going to be in the billions of dollars in PV, no doubt about it, down the road.
Thank you for that.
And maybe to add on this, Andrew, because it is a question that's been asked quite often. When we say we're designing the mine at no more than 5, so we're entering the market, and after year 2, we're about 5, a little bit less than 5% of the market, but our PEA is based on the flat production level. So our market share is going to move down as the market grows, and it's going to move down. So obviously, in reality, is we would like to maintain at least that 5% world market share, and we will further increase capacity. And this is not even accounted in the PEA. Most likely is going to be part of the preliminary pre-fees to keep up at the minimum 5%, but right now it's not even there. So the number is going to be might be looking much more interesting down the road also.
Okay, thank you for that. Another question sent in by Chris McIntyre. I know I asked this first of all to Claude and then to George. Claude, you seem to have a knowledge on batteries. Can you comment on the pros and cons of graphite, LTO, silicon, solid state, and Niobium batteries, and where you see the future going, energy density versus charge rate and costs?
Well, maybe disclaimer, I'm certainly not a battery expert, Chris.
You can sort of hand it over to George if you sort of want to. You can sort of give him the hospital pass.
But I'll explain a little bit the principle that we understand from the battery standpoint. Is and I'll try to use small examples so that everybody can understand. The challenge with graphite batteries is that when you charge or discharge, your lithium ion has to go through the graphite, and that creates there's an obstruction there, and that obstruction creates heat, and the heat could generate what they call dendrite. Dendrite is where your lithium could become on the metal form, and if you get too much lithium metal in your anode, then your battery could explode. So to prevent that from happening, they're controlling the speed at which the current goes through the battery. So that's why it takes more time to charge your car. LTO battery are known very similar to the niobium batteries, although their density is much less. I think it's been proven by research that the density of niobium batteries about twice the density of an NTO battery. I'm sorry. What was the last of his question? Let me see here.
It was graphite. It was obviously energy density versus charge rate and costs.
Yeah, well, charge rate is definitely where it's the most appealing aspect of niobium battery. I wouldn't be surprised that we'll see niobium batteries in the future Formula E. Okay. Fast charging, so you'll be able to see a race where cars will go and get charged instead of being just change the cars. But you need infrastructure in terms of charging a battery in 6 minutes, regardless of what's the chemistry. You need a lot. You need the infrastructure. Like, so if you want to charge a 6 minute 100 kilowatt hour battery, you need 1 megawatt of power to charge it. So you don't find 1 megawatt charging station at every corner of the street. So that's down the road, and the cost to put that in is certainly high. But there's other applications that are certainly much more suitable for niobium battery. And at the end of the day, it's the total cost of ownership. And in that case, this is where niobium battery will win over a number of other technologies.
Okay. Bringing in George from CRU, I mean, obviously you've done a lot of like extensive sort of research on what might sort of approach lithium-ion batteries and some of these other alternative solid state sort of LTO graphite. I don't know if you have any sort of opinions and thoughts on those.
Yeah, sure. So just sort of adding to what Claude was saying. So yeah, your sort of industry standard battery at the moment is sort of a graphite anode, although you can add small amounts of silicon to it to increase the energy density, and that's the general trend with graphite anodes, is it adds small amounts of silicon, and that percentage is slowly increasing up to sort of around some 7 or 8% now. The alternative is you can also have LTO anodes, which are the ones which are very, very fast charging, as Claude said, but the energy density is a lot lower. One way of bumping up the energy density is to introduce sort of NTO technologies, like niobium technologies, as Claude was mentioning. I think the most natural, I think sort of LTO and these sort of fast charging but low capacity batteries will certainly have a niche. I've seen some very interesting research on using them in the bus sector, for example, where they have limited sort of bus routes, but they can charge extremely fast, for example. I think the most natural sort of progression in terms of sort of next generation technologies is probably solid state. That seems to be where the vast majority of sort of next generation funding and sort of research and development seems to be going. And that involves having, without getting too technical, it allows you to replace the graphite anode with a solid lithium anode, which massively increases the energy density of the material and also allows you to charge relatively quickly as well, because you don't have the same issue of intercalation with the graphite sheets, as Claude was mentioning earlier. That's still a while away. I think we're expecting batteries to probably be relatively similar to what they're like today for the next sort of 5-10 years minimum, I would say. There are a lot of technical and commercial hurdles to overcome before we see that technology change. But yeah, I would say solid state, I think there'll always be a niche in the market for sort of like LTO and NTO battery technologies, but solid state is the one that we think is the most sort of natural progression in terms of technology.
Okay, thank you for that. And I think I've got time to squeeze in one last question from Brian Edwards. Again, for yourself, Claude, what are your plans for processing the niobium? Has this been built into your financials?
Well, it's been built in our financial for the production of ferroniobium, definitely. So it's a very simple process. You're doing basically you concentrate your niobium at a range around 60%, and then you use what we call a converter, which is basically an aluminothermic reaction. So it's a very known process, very simple. It's a batch process here. So that's already built in the PA. So there's no further processing required down the road. And obviously, we're in terms of the niobium battery grades, we're running tests right now, so I cannot really comment about what's going to be the process at the end of the day.
Sure. And I think I just want to go just go back and leave the last word to our two investor guests. First, returning to yourself, sort of like Jessie. Do you have any sort of like, if there was like one kind of key takeaway from today's 5 at 5, what would you like to sort of like share with that and share with the audience as to what that one key takeaway would be? Hi, Jessie, you there? Jessie, you're on mute.
Oh, yes,
I just wondered if you had one key takeaway from today's 5 at 5 to share with the audience.
Okay, in terms of from the investment standpoint, I just have one key takeaway. No matter what kind of investment that you make, I guess management team is one of the key criteria to help to make the investment decision.
Okay, thank you for that. And yourself, Matt?
Sure, well, I'll just stick on the niobium theme. I think Claude did a good job of touching on this, but really for this next decade or more here, there's really only going to be one, maybe two winners on the development front. So you have to be very, very discerning which companies you decide to back. And I would be much less excited about grassroots niobium or very early stage projects. I think you want to focus on the more developed projects that are already working their way through the development timeline there and do have somewhat near-term production ability. Because again, it's a very tight market with CBMM there, and there's not all too much room for more than one, maybe two deposits to come online in the foreseeable future.
Okay, well, thank you very much for that. And I think that all that remains for me to do is to go and thank our 4 guests for this week. Also to thank our sponsors, Niobay Metals, and to thank the Resource Global Network as well. See you next week. Until then, stay safe and have a great weekend, everyone.